Let's get ready for the Indiana real estate exam with 100 questions on state-specific laws, principles, practice, and more. And don't miss what's happening in the bottom corner. It'll be key to your prep. We'll tell you how in a minute. Now let's get started.
Let's begin with a review of Indiana real estate law and practice. Fair housing laws in Indiana. Under the Indiana fair housing laws, which classes are protected from discrimination? Is it A, race, color, religion, national origin, sex, physical or mental disability, and familial status? B, age, occupation, height, weight, income level? C, sexual orientation, gender identity, military status? Or D, marital status, education level, employment history? The answer is A, race, color, religion, national origin, sex, physical or mental and familial status. Indiana's fair housing laws align with federal laws, protecting classes like race, color, religion, national origin, sex, disability, and familial status against discrimination in housing. What is the primary role of the Indiana Civil Rights Commission concerning fair housing? Is it A, to license real estate agents in Indiana? B, to enforce compliance with state civil rights laws, including fair housing? C, to resolve every residential lease dispute? Or D, to provide tax incentives to homeowners? The answer is B, to enforce compliance with state civil rights laws, including fair housing. The Indiana Civil Rights Commission enforces state and federal civil rights laws, providing a mechanism to address alleged violations, including those related to fair housing.
Have you noticed the code in the bottom corner? Next time you're stumped, take that code to birdsey.ai for immediate help and a free study session with Birdsey, your personal AI study partner. Plus, you'll get access to hundreds of additional questions, helping you move closer to passing your exam with confidence. The next time you're feeling unsure or stuck, give it a try.
A landlord in Indiana refuses to rent to a family with children under 6 years old due to concerns about lead exposure in an older building. Is this allowed? Is it A, yes, lead exposure is a valid health concern? B, no, this is a violation of fair housing laws? C, yes, as long as the family is provided with alternative housing? Or D, no, unless the family agrees to sign a waiver? The answer is B. No, this is a violation of fair housing laws. Familial status is protected under fair housing laws, and lessors cannot discriminate against families with children regardless of concerns like lead exposure. Which of the following constitutes an illegal practice under Indiana's fair housing laws? Is it A, refusing to make reasonable accommodations for a tenant with disabilities? B, charging a higher deposit based on credit history? C, providing different amenities based on length of lease? Or D, marketing apartments specifically to young professionals? The answer is A, refusing to make reasonable accommodations for a tenant with disabilities. Refusal to provide reasonable accommodations for disabilities is considered illegal discrimination under both federal and Indiana state fair housing laws. Which federal agency primarily enforces the Fair Housing Act that Indiana state laws are designed to complement? Is it A, Department of Real Estate? B, Department of Housing and Urban Development, HUD? C, Internal Revenue Service? Or D, Department of Justice, DA? The answer is B, Department of Housing and Urban Development, HUD. The Department of Housing and Urban Development, HUD, enforces the Fair Housing Act, which federal and Indiana laws aim to support by preventing discrimination in housing. What is a primary obligation of landlords in Indiana under fair housing laws? Is it A, maintain clear rental criteria and policies? B, provide financial assistance to low-income tenants? C, install security systems in rental units? Or D, offer flexible lease terms to all tenants? The answer is A, maintain clear rental criteria and policies. Under Indiana's fair housing laws, landlords must adhere to clear, non-discriminatory policies. This includes maintaining transparent rental criteria to prevent discrimination. What constitutes familial status discrimination under Indiana fair housing laws? Is it A, refusing to rent to families with children, B, offering discounts to seniors, C, providing toys only in certain playgrounds, or D, charging higher rent for larger families? The answer is A, refusing to rent to families with children. Indiana fair housing laws protect families with children from discrimination, including rental refusal. Familial status discrimination involves treating tenants differently based on the presence of children. Real estate contracts in Indiana. What is the main purpose of the statute of frauds in Indiana real estate contracts? Is it A, to ensure that all contracts are notarized, B, to allow for verbal agreements, C, to promote legal formalities in real estate sales, or D, to expedite the closing process? The answer is C, to promote legal formalities in real estate sales. The statute of frauds in Indiana demands that real estate contracts must be in writing to be enforceable, ensuring clarity and preventing fraud in transactions. Under Indiana law, when is earnest money required to be deposited in a trust account? Is it A, immediately upon receipt, B, within 3 banking days of receipt, C, no later than the end of the transaction, or D, only if requested by the buyer? The answer is B, within 3 banking days of receipt. Indiana real estate law stipulates that earnest money must be deposited into a trust account within a specified time frame, often within 3 banking days, to ensure proper handling of client funds. Which party primarily benefits from the due diligence period in a real estate contract in Indiana? Is it A, buyer, B, seller, C, broker, or D, title company? The answer is A, buyer. In Indiana, the due diligence period primarily benefits the buyer by providing time to perform inspections and investigations to ensure the property is satisfactory before proceeding. What happens if a real estate contract in Indiana is found to lack consideration? Is it A, it becomes immediately void, B, it can still be enforced by one party, C, it requires judicial approval, or D, it is converted to a verbal agreement? The answer is A, it becomes immediately void. Consideration is a fundamental element of contracts in Indiana. Without it, a real estate contract is void because there is no mutual exchange of value. Who must sign a real estate contract for it to be enforceable in Indiana? Is it A, both buyer and seller, B, only the buyer, C, only the seller, or D, the buyer, seller, and a witness? The answer is A, both buyer and seller. For a real estate contract to be enforceable in Indiana, both the buyer and the seller must sign it, demonstrating mutual consent and agreement to the terms. In Indiana, under what condition might a real estate contract be deemed voidable? Is it A, when one party lacks the legal capacity to contract, B, when the contract is not recorded, C, when earnest money is not deposited on time, or D, when the contract is oral? The answer is A, when one party lacks the legal capacity to contract. A contract is voidable when one party lacks the capacity to contract, such as minors or individuals with mental incapacities. This protects parties from being bound to something they legally couldn't agree to. Which element is essential for a contract to be valid in Indiana real estate transactions? Is it A, earnest money deposit, B, consideration, C, beneficiary approval, or D, professional appraisal? The answer is B, consideration. Consideration is a necessary element of a valid contract, representing something of value exchanged between parties. Without it, a contract cannot be legally binding in Indiana.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsey.
Disclosures required by Indiana law. What must an Indiana seller disclose when selling a property built before 1978? Is it A, presence of lead-based paint, B, recent termite treatments, C, renovation plans of neighboring properties, or D, pending foreclosure actions? The answer is A, presence of lead-based paint. Under federal law, sellers must disclose the presence of lead-based paint hazards when selling homes built before 1978. This disclosure helps inform buyers about potential health risks. Which document is essential for an Indiana seller to provide to disclose material defects? Is it A, residential real estate disclosure form, B, title insurance policy, C, inspection contingency form, or D, purchase agreement? The answer is A, residential real estate disclosure form. The residential real estate disclosure form is required under Indiana law to disclose known material defects in the property to potential buyers. What is the time frame for providing a disclosure form in an Indiana real estate transaction? Is it A, before a purchase agreement is signed, B, within 30 days after closing, C, at the time of closing, or D, after a home inspection is completed? The answer is A, before a purchase agreement is signed. In Indiana, sellers must provide a disclosure form before signing a purchase agreement to ensure that the buyer is aware of potential defects before entering the contract, which is not a required disclosure according to Indiana real estate law. Is it A, radon levels in the property, B, known water damage, C, floodplain designation, or D, presence of hazardous materials? The answer is A, radon levels in the property. While testing for radon is advisable, Indiana law does not specifically require sellers to disclose radon levels, focusing instead on conditions like water damage and hazardous materials. What is the penalty for non-compliance with Indiana's property disclosure law? Is it A, possible rescission of the sale, B, criminal charges, C, mandatory community service, or D, increased property taxes? The answer is A, possible rescission of the sale. Non-compliance with Indiana property disclosure requirements can result in the buyer exercising their right to rescind the sale if significant undisclosed defects are later discovered. What information must Indiana sellers disclose about their property if it is located in a designated floodplain? Is it A, the 100-year floodplain status only, B, floodplain status and any history of flood claims made, C, only if a flood insurance policy is active, or D, the elevation of the property? The answer is B, floodplain status and any history of flood claims made. Indiana law mandates sellers to disclose if a property is within a floodplain and the history of any flood insurance claims filed. This is to inform potential buyers of flood risks. What must Indiana sellers include in property disclosures regarding radon gas levels? Is it A, radon levels above 4.0 picocuries per liter, B, any spikes in radon levels in the past decade, C, only the presence of a radon mitigation system, or D, radon levels recorded in winter months? The answer is A, radon levels above 4.0 picocuries per liter. Sellers in Indiana must disclose radon gas levels surpassing 4.0 picocuries per liter, according to the EPA's guidelines, to ensure buyers are informed about potential radon hazards. Transfer of title in Indiana. In Indiana, what is the primary document used to transfer title of real estate property? Is it A, grant deed, B, quitclaim deed, C. warranty deed, or D. bargain and sale deed? The answer is C. warranty deed. In Indiana, a warranty deed is commonly used to transfer real estate titles as it guarantees the property is free from liens. It assures the buyer of the seller's legal right to sell. What legal principle allows an Indiana property buyer to inspect public records before purchasing? Is it A. constructive notice, B. actual notice, C. implied notice, or D. subrogated notice? The answer is A. constructive notice. Constructive notice indicates that property buyers are deemed to have knowledge of information contained in public records. This principle supports informed decision-making in real estate transactions by ensuring public access to record information. What right does an interest holder lose upon the recording of a valid deed in Indiana? Is it A. redemption right, B. priority of claim, C. possession right, or D. transfer tax exemption? The answer is B. priority of claim. In Indiana, recording a deed provides public notice of the ownership claim, establishing its priority over other claims. This prevents previously unrecorded interests from taking precedence over the new interest. Which of the following affects the transfer of title under Indiana law? Is it A. property tax payment status, B. home insurance policy, C. zoning regulations, or D. homeowner association dues? The answer is A. property tax payment status. In Indiana, a property's title may be clouded by tax liens due to unpaid taxes. Thus, addressing outstanding tax payments is vital for smooth title transfers. In Indiana, what does a title search help to uncover? Is it A. zoning ordinances, B. encumbrances on property, C. property condition, or D. The answer is B. encumbrances on property. A title search in Indiana is intended to reveal encumbrances, such as liens or claims, to ensure a clean transfer of title. It protects buyers from future disputes over ownership rights. What is one method by which a title can be transferred involuntarily in Indiana? Is it A. deed of sale, B. adverse possession, C. joint tenancy, or D. escrow closure? The answer is B. adverse possession. Adverse possession allows a person to claim legal ownership of a property if they have occupied it continuously and openly for a period prescribed by Indiana law, typically 10 years. How often must an Indiana property owner pay property taxes to maintain clear title? Is it A. bi-monthly, B. quarterly, C. biannually, or D. annually? The answer is C. biannually. In Indiana, property owners are required to pay property taxes biannually, typically due on May 10th and November 10th. Failure to pay these taxes can eventually lead to a lien on the property.
Notice the code in the corner? When you're stumped by a question, enter it at birdsey.ai for immediate help. Enjoy complimentary study sessions and access to hundreds of additional questions to help you pass your exam with confidence.
Earnest money and escrow in Indiana. What must an Indiana real estate broker do with earnest money received as part of a transaction? Is it A. deposit it in their personal account immediately, B. deposit it in a trust or escrow account, C. hold it until the transaction is completed, or D. send it directly to the seller's account? The answer is B. deposit it in a trust or escrow account. According to Indiana real estate law, brokers must promptly deposit earnest money into a separate trust or escrow account to prevent commingling with personal or business funds. In the event of a dispute over earnest money in Indiana, what actions are permitted by the escrow agent without a mutual release? Is it A. release the funds to whichever party requests it first, B. retain the funds until both parties provide a mutual release, C. Invest the funds in a high-yield account to earn interest. Or D. Use the funds to cover brokerage fees. The answer is B. Retain the funds until both parties provide a mutual release. Escrow agents in Indiana are required to hold the funds until they receive mutual written instructions from all parties involved or a court order. This ensures proper fund handling. How long does an Indiana broker have to deposit earnest money into an escrow account after acceptance of an offer? Is it A. 24 hours, B. 3 business days, C. 2 banking days, or D. 1 week? The answer is C. 2 banking days. Indiana brokers must deposit earnest money into an escrow account within 2 banking days of offer acceptance, ensuring timely and secure handling of client funds. Who is authorized to manage escrow accounts according to Indiana real estate law? Is it A. Only the broker associated with the buyer, B. Licensed Indiana brokers only, C. Any employee of a real estate firm, or D. The seller's attorney? The answer is B. Licensed Indiana brokers only. Under Indiana law, licensed brokers are the only individuals authorized to manage escrow accounts, ensuring compliance with state regulations and proper handling of earnest money. What documentation must accompany the deposit of earnest money into an escrow account in Indiana? Is it A. A copy of the buyer's identification, B. A signed purchase agreement, C. A notarized letter of intent, or D. A written agreement from the seller? The answer is B. A signed purchase agreement. The signed purchase agreement must accompany earnest money deposits to validate the terms of the transaction and the escrow's purpose as per Indiana real estate protocols. What happens to the earnest money if both parties mutually agree to terminate the contract in Indiana? Is it A. The earnest money is refunded to the buyer, B. The earnest money is retained by the broker, C. The earnest money is split between the buyer and seller, or D. The earnest money is forfeited to the seller? The answer is A. The earnest money is refunded to the buyer. When both parties mutually agree to terminate the contract, the earnest money is usually refunded to the buyer unless otherwise agreed. Indiana laws require adherence to mutual deposits agreements. Under Indiana law, who is responsible for ensuring the accuracy of the escrow account records? Is it A. The buyer, B. The seller, C. The managing broker, or D. The title company? The answer is C. The managing broker. According to Indiana real estate regulations, the managing broker must ensure the accuracy of the escrow account records, reflecting all transactions and balances as required by state law. Indiana real estate taxes. Which type of property tax is assessed based on the property's market value in Indiana? Is it A. Personal property tax, B. Real property tax, C. X, or D. Sales tax? The answer is B. Real property tax. In Indiana, real property taxes are based on the assessed market value of the real estate. The county assessor determines the property's market value to calculate this tax annually. What is the role of the county assessor in Indiana's property tax system? Is it A. To collect property taxes, B. To determine property tax rates, C. To assess the value of real property, or D. To manage tax appeals? The answer is C. To assess the value of real property. The Indiana County Assessor's primary responsibility is to assess property values for tax purposes. This assessment determines the tax base for calculating individual property taxes. What is the tax exemption offered for certain Indiana residents on their primary residence? Is it A. Agricultural exemption, B. Homestead exemption, C. Income-based exemption, or D. Senior citizen exemption? The answer is B. Homestead exemption. Indiana offers a homestead exemption, which reduces the taxable value of a resident's primary home. This helps lower the amount of property taxes owed each year. How often must property taxes be paid by Indiana homeowners? Is it A, annually, by the end of the year, B, semi-annually in May and November, C, quarterly, or D, monthly? The answer is B, semi-annually in May and November. In Indiana, property taxes are paid semi-annually with installments due in May and November. This schedule helps manage the tax payment load by splitting it into two parts. What is the consequence of failing to pay property taxes on time in Indiana? Is it A, permanent loss of property, B, accrual of interest and penalties, C, immediate foreclosure, or D, loss of voting rights? The answer is B, accrual of interest and penalties. In Indiana, failure to pay property taxes on time leads to interest charges and penalties. Unresolved debts can eventually result in tax sales or liens. Prompt payment avoids these consequences. What is the role of the Indiana Board of Tax Review? Is it A, to assess the property prices in Indiana, B, to hear property tax appeals from taxpayers, C, to collect property taxes, or D, to set property tax rates? The answer is B, to hear property tax appeals from taxpayers. The Indiana Board of Tax Review handles appeals related to property tax assessments. Taxpayers can appeal assessments if they believe there was an error in their valuation. Who determines the assessed value of a property in Indiana? Is it A, the property owner, B, the county assessor, C, the Indiana Department of Revenue, or D, local real estate agents? The answer is B, the county assessor. The county assessor is responsible for determining the assessed value of properties in their jurisdiction based on Indiana's real estate assessment guidelines. Indiana real estate licensing and regulation. What is the minimum educational requirement for an individual to apply for a real estate salesperson license in Indiana? Is it A, high school diploma or equivalent, B, bachelor's degree in real estate, C, 60 credit hours of college education, or D, certification from a community college? The answer is A, high school diploma or equivalent. Indiana requires salesperson applicants to have a high school diploma or equivalent as a basic educational qualification, aligning with standard prerequisites set by the Indiana Real Estate Commission. Which of the following is necessary to renew a real estate license in Indiana? Is it A, paying a renewal fee and completing continuing education courses, B, submitting a new application only, C, passing a renewal exam, or D, only paying the renewal fee? The answer is A, paying a renewal fee and completing continuing education courses. To renew an Indiana real estate license, licensees must complete a specified number of continuing education hours and pay the renewal fee, ensuring they remain updated on current laws and practices. What is the role of the Indiana Real Estate Commission concerning disciplinary actions? Is it A, to issue fines only, B, to renew expired real estate licenses, C, to enforce rules and regulate licenses, including suspension or revocation, or D, to handle local real estate market conditions? The answer is C, to enforce rules and regulate licenses, including suspension or revocation. The Indiana Real Estate Commission is responsible for ensuring compliance with real estate laws, including taking disciplinary actions such as suspension or revocation of licenses to uphold professional standards. How long is the initial term for a real estate salesperson license in Indiana? Is it A, 1 year, B, 2 years, C, 3 years, or D, 5 years? The answer is B, 2 years. The initial term for a salesperson license in Indiana is 2 years, after which the licensee must meet continuing education requirements to renew the license and remain in practice. Which of the following actions could lead to revocation of a real estate license in Indiana? Is it A, failure to disclose a conflict of interest? B, participating in continuing education? C, having an inactive license? Or D, maintaining a real estate website? The answer is A, failure to disclose a conflict of interest. Indiana real estate laws require the full disclosure of conflicts of interest. Failing to disclose such conflicts can be grounds for serious disciplinary action, including license revocation, to maintain integrity in real estate transactions. What primary role does the Indiana Real Estate Commission play? Is it A, issuance of driver's licenses? B, issuance and regulation of real estate licenses? C, managing real estate taxes? Or D, setting property zoning laws? The answer is B, issuance and regulation of real estate licenses. The Indiana Real Estate Commission oversees the issuance and regulation of real estate licenses. They ensure compliance with state laws and uphold standards of practice. Which entity is responsible for upholding the legal standards of real estate licensing in Indiana? Is it A, Indiana Real Estate Commission? B, Indiana Department of Revenue? C, Federal Trade Commission? Or D, Indiana Supreme Court? The answer is A, Indiana Real Estate Commission. The Indiana Real Estate Commission is tasked with setting and maintaining the standards for licensing and practice within the real estate industry in Indiana, ensuring compliance with state laws. Indiana Real Estate Commission. What is the primary function of the Indiana Real Estate Commission, IREC? Is it A, to set interest rates for mortgages statewide? B, to issue and regulate real estate licenses in Indiana? C, to provide legal services to real estate firms? Or D, to conduct training workshops for real estate agents? The answer is B, to issue and regulate real estate licenses in Indiana. The Indiana Real Estate Commission, IREC, handles issuing licenses and regulatory compliance, ensuring real estate professionals adhere to legal and ethical standards according to Indiana laws. How often must a real estate broker in Indiana renew their license to remain active? Is it A, every year? B, every 2 years? C, every 3 years? Or D, every 5 years? The answer is B, every 2 years. In Indiana, real estate brokers must renew their licenses every 2 years to continue practicing legally, ensuring that they remain compliant with training and state requirements. What can result in the suspension of a real estate license by the Indiana Real Estate Commission? Is it A, failure to complete continuing education requirements? B, advertising outside of Indiana? C, a decline in real estate sales? Or D, repainting office premises without approval? The answer is A, failure to complete continuing education requirements. The IREC requires licensees to complete specific continuing education to maintain their licenses. Failure to do so can result in suspension until compliance is achieved. Who appoints the members of the Indiana Real Estate Commission? Is it A, the Governor of Indiana? B, the Indiana Chamber of Commerce? C, real estate broker associations? Or D, independent counseling panels? The answer is A, the Governor of Indiana. The Governor of Indiana appoints members to the IREC, ensuring representation and oversight aligned with state priorities in real estate practices. Which entity under the Indiana Real Estate Commission is primarily responsible for handling complaints against licensees? Is it A, the Education Subcommittee? B, the Disciplinary Committee? C, the Licensing Division? Or D, the Auditing Committee? The answer is B, The disciplinary committee. The disciplinary committee under the IREC reviews complaints against licensees, ensuring compliance with Indiana regulations and promoting ethical conduct within the profession. Let's continue with a review of Indiana real estate finance. Loan fundamentals. What is the primary purpose of a promissory note in real estate finance? Is it A, to serve as a legal agreement for property transfer? B, to document the borrower's obligation to repay a loan? C, to determine property boundaries and usage? Or D, to verify the property's market value? The answer is B, to document the borrower's obligation to repay a loan. A promissory note is essential in real estate finance as it legally records a borrower's obligation to repay a specified amount to the lender under agreed terms, making it fundamental to loan agreements. Which term refers to the gradual repayment of a real estate loan through periodic installments? Is it A, amortization, B, balloon payment, C, equity buildup, or D, interest accrual? The answer is A, amortization. Amortization is a systematic repayment process where the loan amount and interest are distributed over time. This reduces the loan balance gradually, making it a core principle in real estate finance. What is a deed of trust typically used for in real estate transactions? Is it A, to secure a loan with real estate as collateral? B, to provide survey details of the property? C, to transfer ownership of the property? Or D, to outline building codes and restrictions? The answer is A, to secure a loan with real estate as collateral. A deed of trust is a legal document used to secure the loan, conveying legal title to a trustee until the borrower repays the debt, making it integral to mortgage financing. Which type of loan involves periodic interest-only payments with the principal due at the end of the term? Is it A, fully amortized loan, B, interest-only loan, C, balloon loan, or D, adjustable rate mortgage? The answer is B, interest-only loan. An interest-only loan requires borrowers to make regular payments solely covering the interest, with the loan's principal due at the end. This is a common arrangement in real estate lending. What does the term LTV ratio stand for in real estate finance? Is it A, lease time value, B, loan to value, C, listing transfer volume, or D, land title verification? The answer is B, loan to value. The loan to value LTV ratio is a key metric in assessing loan risk, representing the loan amount as a percentage of the property's appraised value, crucial in lending decisions. What security instrument conveys real property as security for a mortgage loan and involves three parties, borrower, lender, and trustee? Is it A, promissory note, B, mortgage, C, deed of trust, or D, lien? The answer is C, deed of trust. A deed of trust is a real estate transaction used primarily in certain U.S. states. It involves three parties, the borrower, the lender, and the trustee. It serves as security for a loan, with the trustee holding the property title. In real estate finance, which term describes the maximum loan amount a lender will provide based on the property's appraised value? Is it A, debt ratio, B, inflation adjustment, C, loan-to-value ratio, or D, subordination? The answer is C, loan-to-value ratio. The loan-to-value ratio is crucial in real estate finance as it helps lenders assess risk. A higher LTV ratio indicates greater risk because it means the borrower is financing a larger portion of the property purchase.
Don't forget to comment below with your tips, challenges, and thoughts on exam preparation. Your experiences can make a big difference for others.
Loan types. Which type of loan is specifically designed for veterans, allowing them to purchase a home with no down payment required? Is it A, conventional loan. B, the Federal Housing Administration, FHA loan. C, Veterans Affairs, VA loan. Or D, the U.S. Department of Agriculture, USDA loan. The answer is C, Veterans Affairs, VA loan. VA loans, administered by the U.S. Department of Veterans Affairs, provide favorable terms for veterans and active duty service members, including no down payment requirements. What is a key feature of an FHA loan? Is it A, requires private mortgage insurance? B, requires upfront mortgage insurance premium? C, limited to first-time homebuyers? Or D, has stricter credit score requirements than conventional loans? The answer is B, requires upfront mortgage insurance premium. FHA loans, managed by the Federal Housing Administration, include an upfront mortgage insurance premium, making them accessible to borrowers who might not afford conventional loans. What differentiates conventional loans from FHA and VA loans? Is it A, government-backed? B, lower down payment options? C, no mortgage insurance required? Or D, not insured by a government agency? The answer is D, not insured by a government agency. Conventional loans are standard lending products from private lenders. They are not government insured, distinguishing them from FHA and VA loans, which have special government backing. A USDA loan is typically used for purchasing homes in what type of area? Is it A, urban? B, rural? C, coastal? Or D, commercial? The answer is B, rural. The United States Department of Agriculture provides USDA loans to individuals purchasing homes in rural areas, aiming to promote growth and development in less densely populated regions. Which loan type often requires the borrower to purchase private mortgage insurance, PMI, if the down payment is less than 20%? Is it A, Veterans Affairs, VA loan? B, conventional loan? C, the Federal Housing Administration, FHA loan? Or D, the U.S. Department of Agriculture, USDA loan? The answer is B, conventional loan. Private mortgage insurance protects the lender in conventional loans when the borrower's down payment is less than 20%, ensuring financial security despite the higher financial risk. What is the primary benefit of a VA loan for eligible veterans? Is it A, higher interest rates? B, no down payment requirement? C, mandatory PMI? Or D, strict income requirements? The answer is B, no down payment requirement. VA loans are intended to help eligible veterans purchase homes with no down payment required, making it easier for them to become homeowners. This benefit is backed by the Department of Veterans Affairs. What distinguishes an FHA loan from a conventional loan? Is it A, higher down payment? B, government insurance? C, no credit score requirement? Or D, no appraisal requirement? The answer is B, government insurance. FHA loans are backed by government insurance through the Federal Housing Administration, which allows borrowers to qualify with lower down payments and credit scores compared to conventional loans. Loan qualifications. Which document primarily outlines the loan qualifications for a prospective borrower in Indiana? Is it A, appraisal report? B, credit score? C, loan application? Or D, purchase agreement? The answer is C, loan application. In Indiana, the loan application is critical as it summarizes a borrower's income, credit history, and financial position, which are assessed to determine loan eligibility. What role does the debt-to-income DTI ratio play in qualifying for a real estate loan in Indiana? Is it A, it determines interest rates? B, it reflects the borrower's financial stability? C, it guarantees loan approval? Or D, it calculates property taxes? The answer is B, it reflects the borrower's financial stability. The debt-to-income (DTI) ratio is critical in assessing a borrower's capacity to manage monthly payments and debts, a key factor in loan qualification decisions in Indiana. What is the minimum credit score typically required for FHA loans in Indiana? Is it A, 500, B, 580, C, 620, or D, 750? The answer is B, 580. For FHA loans in Indiana, a minimum credit score of 580 is typically required to qualify for favorable terms, such as lower down payments. Which factor is not considered during the pre-qualification process for a real estate loan in Indiana? Is it A, borrower's income, B, housing market conditions, C, credit history, or D, employment status? The answer is B, housing market conditions. Housing market conditions are not directly tied to pre-qualification processes, which focus on the individual's financial circumstances, such as income, debt, and credit history. How does an Indiana lender typically verify a borrower's employment during the loan qualification process? Is it A, through credit bureaus, B, by requesting tax returns, C, by contacting employers directly, or D, by reviewing bank statements? The answer is C, by contacting employers directly. Indiana lenders commonly verify employment through direct communication with employers to confirm job status and income, ensuring the borrower meets the loan's income requirements. Which financial factor is assessed by Indiana lenders to determine a borrower's ability to repay a real estate loan? Is it A, credit history, B, property location, C, tax history, or D, employment duration? The answer is A, credit history. In Indiana, lenders primarily evaluate the borrower's credit history to assess repayment capacity. It's a critical factor influencing loan approval decisions. What is a common income verification method used by Indiana lenders during the loan qualification process? Is it A, interview with employer, B, review of tax returns, C, credit score analysis, or D, property appraisal? The answer is B, review of tax returns. Lenders in Indiana often utilize tax returns as a way to verify a borrower's income, ensuring truthful reporting and stable income history prior to loan approval. The loan application process. Which of the following is the initial step in the Indiana loan application process? Is it A, property appraisal, B, credit check, C, pre-qualification, or D, loan closing? The answer is C, pre-qualification. Pre-qualification is the initial step in the loan application process, where potential borrowers receive an estimate of how much they can borrow based on financial information. It precedes formal application and approval stages. What financial document is typically required when applying for a mortgage in Indiana? Is it A, last 3 tax returns, B, profit and loss statement, C, 2 recent pay stubs, or D, title deed of the property? The answer is C, 2 recent pay stubs. 2 recent pay stubs are commonly required as part of the mortgage application process to verify a borrower's current income, ensuring the lender assesses their ability to repay the loan. In Indiana, which factor is crucial for the lender to consider during the loan application process? Is it A, zoning laws, B, borrower's credit score, C, age of the property, or D, local tax rates? The answer is B, borrower's credit score. Lenders consider the borrower's credit score crucial as it reflects financial history and reliability, impacting loan approval, terms, and interest rates, per guidelines from Indiana real estate regulatory authorities. Which document outlines the terms of the loan offer in the application process? Is it A, loan estimate, B, closing disclosure, C, purchase agreement, or D, inspection report? The answer is A, loan estimate. The loan estimate provides borrowers with a summary of their loan's key components, including interest rate and closing costs, helping borrowers understand and compare financing options before proceeding with the loan. What is typically assessed by lenders during the loan underwriting process in Indiana? Is it A, property listing price, B, borrower's income verification, C, neighborhood crime rate, or D, future market predictions? The answer is B, borrower's income verification. During underwriting, lenders examine a borrower's financial background, including income verification, credit score, and debt levels, to ensure the borrower's capacity to repay the mortgage, complying with Indiana real estate finance standards. What is the primary purpose of the loan application form in the Indiana real estate finance process? Is it A, to provide personal details to the lender, B, to calculate property taxes, C, to negotiate the loan interest rate, or D, to finalize the loan agreement? The answer is A, to provide personal details to the lender. The loan application form is crucial for gathering necessary personal, employment, and financial details to assess the applicant's eligibility for a mortgage. Underwriting for Indiana real estate. Which factor is commonly reviewed during real estate underwriting in Indiana? Is it A, borrower's employment status, B, property's location in a flood zone, C, market trends in neighboring states, or D, borrower's educational background? The answer is A, borrower's employment status. In Indiana, real estate underwriters assess a borrower's employment status as part of determining creditworthiness. A stable job indicates a steady income, which is pivotal in repaying mortgage loans. What is typically verified by underwriters in the appraisal process? Is it A, the property's historical significance, B, the current fair market value, C, the popularity of architectural design, or D, the owner's criminal record? The answer is B, the current fair market value. Underwriters in Indiana ensure that a property's appraisal reflects its current fair market value, validating that the loan amount aligns with the property's worth to protect the lender from overlending. Which document is essential for underwriting in Indiana? Is it A, zoning code amendments, B, income verification documents, C, loan advertisement materials, or D, borrower's birth certificate? The answer is B, income verification documents. Income verification documents are vital in the underwriting process in Indiana. They help assess whether the borrower has a stable and sufficient income to manage loan repayments effectively. What type of insurance is often required by lenders during underwriting? Is it A, life insurance, B, health insurance, C, title insurance, or D, automobile insurance? The answer is C, title insurance. Title insurance is crucial in Indiana real estate underwriting. It ensures that the buyer holds a valid title to the property, protecting against legal disputes or claims against the property. How do underwriters assess a borrower's credit risk in Indiana? Is it A, by evaluating the borrower's social media presence, B, by analyzing the borrower's credit score, C, by reviewing family background, or D, by examining annual holiday expenses? The answer is B, by analyzing the borrower's credit score. In Indiana, a borrower's credit score is a key element in underwriting to evaluate their credit risk. A higher score usually indicates a lower risk, suggesting the borrower is more likely to meet financial obligations. What determines the maximum loan-to-value ratio in Indiana real estate underwriting? Is it A, the borrower's credit score, B, the property type and risk level, C, the interest rate, or D, the borrower's income? The answer is B, the property type and risk level. The loan-to-value (LTV) ratio is critical in underwriting as it reflects lending risk. Indiana lenders assess the property's type and risk to establish the LTV ceiling, balancing financing against potential default. Loan closing. Which of the following best describes the role of an escrow agent during a loan closing in Indiana? Is it A, acts as a neutral third party to ensure all terms of the agreement are met? B, prepares the buyer's financial documents for lender approval? C, determines the fair market value of the property? Or D, provides legal advice regarding the loan documents? The answer is A, acts as a neutral third party to ensure all terms of the agreement are met. An escrow agent in Indiana facilitates the completion of a real estate transaction by acting as a neutral party, ensuring all parties adhere to the contract before the transaction is finalized. What document is primarily used to outline the borrower's and lender's rights and responsibilities at closing? Is it A, the closing disclosure, B, the purchase agreement, C, the promissory note, or D, the deed of trust? The answer is A, the closing disclosure. The closing disclosure is crucial in Indiana closings, detailing financial terms and conditions of the loan, ensuring transparency before the final steps of property transfer. In Indiana, who is usually responsible for paying the closing costs associated with real estate transactions? Is it A, only the buyer, B, only the seller, C, both buyer and seller share the costs based on the agreement, or D, the mortgage lender? The answer is C. Both buyer and seller share the costs based on the agreement. In Indiana real estate transactions, who pays which closing costs is negotiable, with specific responsibilities often outlined in the purchase contract. What is the primary purpose of a title search in closing an Indiana real estate transaction? Is it A, to verify the buyer's creditworthiness, B, to confirm the property's appraised value, C, to ensure there are no legal claims or liens against the property, or D, to appraise the property's future market value? The answer is C, to ensure there are no legal claims or liens against the property. A title search is essential in Indiana to assure the property's legal status is clear, free from claims or liens, securing valid ownership transfer during closing. During an Indiana loan closing, what happens during the recording process? Is it A, signing loan documents by the buyer, B, payment transfer from lender to seller, C, publicly documenting the transfer of property ownership, or D, final home inspection? The answer is C, publicly documenting the transfer of property ownership. Recording in Indiana is the official public documentation of property transactions and liens, safeguarding rights by providing public notice of ownership changes post-closing. What is the main reason for the issuance of a title insurance policy during an Indiana real estate closing? Is it A, to ensure the buyer gets a valid mortgage, B, to cover potential legal defects in the property's ownership, C, to guarantee the property's market value, or D, to confirm property tax payments are current? The answer is B, to cover potential legal defects in the property's ownership. Title insurance in Indiana real estate transactions provides protection against undiscovered legal defects or claims that contradict the new owner's right to title, offering peace of mind to buyers and lenders. Indiana mortgage disclosure requirements. What is the main purpose of the Indiana mortgage disclosure statement? Is it A, to advertise real estate properties to potential buyers, B, to ensure loans comply with fair housing laws, C, to provide borrowers with clear and accurate information about mortgage terms and conditions, or D, to establish a real estate escrow account? The answer is C, to provide borrowers with clear and accurate information about mortgage terms and conditions. The Indiana Mortgage Disclosure Statement helps ensure that borrowers receive clear and complete information about the terms of their mortgage loan, enhancing transparency and informed decision-making. Which of the following must be included in the Indiana Mortgage Disclosure Statement? Is it A, current market value of the home, B, interest rate and any potential changes during the loan term, C, name and contact information of the seller, or D, list of nearby schools and amenities? The answer is B, interest rate and any potential changes during the loan term. Indiana law requires that specific financial terms, including interest rates and potential changes, be disclosed to the borrower to prevent misunderstandings regarding loan obligations. How does Indiana state law ensure compliance with mortgage disclosure requirements? Is it A, by mandating annual updates to disclosure forms, B, by providing penalties for lenders who fail to disclose key information, C, by requiring independent mortgage audits every year, or D, by obligating all borrowers to waive disclosure rights? The answer is B, by providing penalties for lenders who fail to disclose key information. Indiana enforces mortgage disclosure compliance by penalizing lenders who do not adhere to disclosure rules, ensuring borrower protection under real estate law. What must a lender disclose about the potential for changes in mortgage interest rates? Is it A, only if the rates can decrease, B, all possibilities of rate adjustments, whether increase or decrease, C, only if there is a possibility of a rate increase, or D, changes in reference to inflation? The answer is B, all possibilities of rate adjustments, whether increase or decrease. Indiana law requires lenders to disclose any potential interest rate changes to borrowers, ensuring they understand both upward and downward rate risks during the loan. Which agency oversees and enforces mortgage disclosure compliance in Indiana? Is it A, Indiana Department of Real Estate, B, Indiana Department of Financial Institutions, C, Indiana Housing and Community Development Authority, or D, Federal Housing Administration? The answer is B, Indiana Department of Financial Institutions. The Indiana Department of Financial Institutions is responsible for monitoring and enforcing compliance with state mortgage disclosure laws, ensuring transparency within mortgage transactions. Which item must be disclosed in an Indiana mortgage transaction? Is it A, the names of previous property owners, B, the interest rate and terms of loan repayment, C, future property tax estimates, or D, neighborhood crime rates? The answer is B, the interest rate and terms of loan repayment. Indiana mortgage disclosures must include the interest rate and terms of loan repayment, ensuring borrowers understand their financial obligations and the cost of the loan. In Indiana, how often must lenders provide the annual privacy notice? Is it A, annually, B, during the application process only, C, whenever requested by the borrower, or D, every 2 years? The answer is A, annually. The annual privacy notice is required by law to be provided by lenders every year, ensuring borrowers are informed about how their personal information is collected and used.
Thanks for joining us today. If you found this video helpful, subscribe to our channel for more practice exams, tips, and tricks. And don't forget to visit birdsey.ai for complimentary study sessions with Birdsey, your AI-powered study partner.